Welcome everyone. Today is Friday, November the 14th, and in this video I'm going to go through the technicals of the S&P 500. I'm going to go through the triple Qs and of course through the technicals of the Max 7. And the main idea is to understand where we are after the US government shutdown, especially after the 2-day sell-off that I think it's quite evident to most of the bulls in the market like me. And I want to understand what are the key levels to track going into the December 10th meeting, because that's when the Fed is going to decide whether to lower the rates or not. And in a previous video, I went into full details. I did a macro analysis to understand why I think we're going to have a rate cut and why the odds could be higher than 50%, which is what Polymarket is pricing in today. But in this video, I'm not going to focus on the CPI, on the unemployment rates. I'm just going to look at charts. Let's start with the SPY. I like the SPY. There is a clear upward trend that started back in the summer. And overall, I can see the formation of a triangle. And this is a sign of hesitation. It's not necessarily a positive sign. But as long as the price is respecting the upper trend line, and it's trading above that, or it's closing above the line, I will consider things to remain cautiously optimistic. Now, I wouldn't be as certain right now to buy because, well, we had a 2-day sell-off. That's very good news for the Max 7, that there was a massive tech sell-off since the end of the US government shutdown. And you always know that you have to buy when the chart looks awful. However, if there are any announcements, because there is a lot of pessimism right now, there is a lot of caution, and you can see that this decline, in my opinion, is unjustified because the White House said that October data is not going to be released, and then Kevin Hassett said that actually it's going to be released, but not the unemployment rate, but we are going to release the payroll figures. There is a lot of back and forth between we're going to do this, we're going to do that. And when there is hesitation, the market resolves by selling off. So overall, I think the data is going to indeed be released. And I think the unemployment rate is going to increase, likely 4.4, 4.5%, as noted in the Challenger report with, I think we had a record October since 2003 in regards to job cuts. Announced job cuts, and then of course, the record since 2020 in regards to job cuts announcements year to date. So overall, when I look at the charts, I can see convergence, and interestingly enough, the chart converge around December 10th, which is when the FOMC meeting is going to take place. Any break to the downside of this line is going to be negative. So keep a close eye, but I would rather prefer to pay a premium later on when we are very close to the December 10th meeting, as it's quite likely that the November data for inflation and unemployment is going to be released. And when the data is going to be favorable, I think the markets are going to react positively, likely breaking this resistance, before the December 10th meeting. That's what I think. However, any announcement from the government, considering the current pessimism, could lead to more downward pressure. So I think the risk reward is not there yet, in my opinion. I would rather wait a few days before we know when the October data and the November data is going to be released. All right, moving on to the triple Qs, we've seen, I wouldn't say this is something to worry. We've seen the price breaking the upper trend line, but it reversed quickly. Now, of course, the triple Q is, heavy weighted towards the tech, and of course, this was driven by the tech sell-off. And speaking of the tech sell-off, Nvidia is actually has recovered the losses today, finally, because we had a few days that pessimism was quite pressuring the stock. And you can see, I'm going to pull up Palantir. It's not a Max 7, but the reason I like to look at Palantir and Nvidia is because Michael Burry. So as you know, Michael Burry is going to close his fund, Scion Asset Management, And well, it turns out that he's going short against Palantir and Nvidia. Now, when we look at both stocks, you can see a high correlation in the past few weeks. You can see the high beta in the last weeks. And overall, I think that the trend is, I would say, constructive. Look, I wouldn't buy right now because there is a lot of uncertainty. First, in regards to the next earnings season, Huang already anticipated that the results are going to be very good and there is nothing to worry, but that sets the bar very high. And now they really have to surprise the market when it comes to guidance for the next quarter and overall the entire fiscal year 2026. And the main risk I see with Nvidia in the next earnings, and I'm going to do another analysis on this, is in regards to the margins. So if sales in China resume, usually those sales, they don't have a high margin. So selling downgraded H20s, it shouldn't be a surprise that it's quite worse than selling, a Blackwell Ultra, the GB300. And because of that, gross margins were guided mid 70s because, Jensen Huang already considered that they're not going to sell to China. If for any reason they decide that they're actually going to sell to China in the third, fourth quarter, and they downgrade the gross margin guidance from mid 70s to low 70s, that single item could tank Nvidia. And if the price breaks the 180s, the next stop is likely in the high or mid 140s. So there is a risk. I wouldn't be messing around with Nvidia during earnings because China is a double-edged sword. So yeah, some caution in regards to Nvidia. Palantir, the picture looks actually better. It's a high beta stock, so if Nvidia tanks the S&P, this is going to follow. I don't think this, that will happen, but it's a risk that's worth monitoring. Now, looking at the chart, I can see a clear support at 170, which is, I would say, constructive, but I remain hesitant on Nvidia during the next week earnings. Meta is actually looking really good. We have a 600 support. This is I would call it psychological support because if you look at price action, yes, there have been some times, when the price, had a resistance and then it bounced back and then a little bit of support, but it's not a clear support level. It's more like a psychological support. So yeah, 600 is fine. I'm not that spooked. In fact, I own a very good amount of Meta calls, both, I think it's around here. Let's say 630s. I don't know exactly how much was the share price when I bought them, but they're down, I don't know, 20%, 30%. I'm not sweating that because, with options you can be down, and I've been down 70%, 80%, and then in a matter of 2 weeks, the market's rallied, and then I'm up 160%. So I don't look at options in terms of return of, where am I with my calls, because it's quite random, to be honest. So moving on, Microsoft is looking very good. I can see a clear consolidation after a bull run. And if you zoom out, there is a broader bull run since, the lows in 2022. Now, overall, I would expect the catalyst to move the price from this consolidation level, and likely that's going to be next quarter's earnings, especially if we have a lot of choppiness in the S&P. Well, I don't think we're going to have that. As I said before, I do expect to break beyond the support level, but I'm just cautious right now because anything from the White House can break the lower support. So I would rather pay a premium later on than taking the risk now. Now, moving on, Apple is looking really good. I mean, the trend is particularly favorable. Can it pull back to this, trend line? Yes, but I don't see anything to suggest that Apple is going to suffer, even in the event of a sell-off of Nvidia next week. You already know that Apple has I wouldn't say a high beta, especially not now, because actually I'm very curious on what's the beta for Apple. Let me just have a seeking alpha. 1.14. Not bad. It's quite lower than Nvidia, right? Certainly. Let's see. Certainly lower than Nvidia. 2.34, exactly. So Apple is actually one of the winners in the Max 7 in the midst of the sell-off we had in the past 2 days. I mean, not bad. Yesterday, today is up 0.3%. Yesterday was flat almost. 2 days ago, Wednesday, negative 0.66. That's nothing. The one that is actually, suffering the broader market sell-off is Tesla. So Tesla, don't look at fundamentals. Nobody's looking at fundamentals when we talk about Tesla. So Tesla is more like a narrative stock, and I don't know what I see here. It's difficult to draw trend lines because it's quite a choppy, volatile stock. So just because we had the break below this trend line and now it's back up, it's not necessarily a bear trap, is what I want to say. I remain skeptic on Tesla. In the very long term, yeah, it can be a very interesting stock, especially once they have the humanoids running. Until then, this is going to be many years. And you can see already what happened in 1 year. You can see stock price went down 55% and then it recovered flat. And that's 1 year, let alone what's going to happen in the next 5, 7, 8 years. And when we're going to have a meaningful contribution from the humanoids into the top line of the company. Moving on, Google. Google looks fine. Similar to Apple, I mean, yeah, we had the low single-digit sell-off for the past 3 days, tracking the broader markets. But the trend doesn't look bad. I'm not worried about Alphabet. In fact, if it tests eventually this, upper support line, it will be something quite bullish. So out of the entire Max 7, the ones that I really like are Meta and Google. Apple and Google. Meta is also good, but it's a falling knife. And, I was brave enough to catch it, but it's risky. Meta, the risk reward is not the same as for Google or Apple. Now, Amazon. Overall, I can see that the support line, was violated. So we have the share price now trending very close to this upper trend line. Overall, I wouldn't be able to draw a conclusion on what's happening with Amazon. The price is at a critical level. If it breaks this line, it's likely going to sell off. And if it recovers, I would expect some consolidation, similar to Microsoft before it runs. I think Amazon is a catalyst, and I don't see a catalyst until the next earnings. So overall, that's the overview for the Max 7, the broader markets. I'm cautiously optimistic, especially after today's run. We had I would say a panic sell-off in the pre-market session, and you can see we had a very nice green candle, very good. But I remain skeptic again until we have the data from the government in regards to unemployment and CPI. Right. Thanks for watching the video, and I'll see you in the next one.